What do you got for us?
Jimmy, I agree. Time to buy when there's blood on the streets. Hello, everyone. I'm Larry Kudlow. Welcome to the Kudlow Report. Topic A tonight seemed to be the trigger for a bone-crushing day in the market. There are also economic jitters. We're going to get to that. The question is, where does it leave us, and what is next for the market and for you investors? Continuing our breaking news coverage, here now is Tommy Belesis, founder and CEO of John Thomas Financial, Lincoln Ellis, Chief Investment Officer for Strategic Financial Group. Gentlemen, I need some quick comments on this. First of all, Lincoln, do you buy with all this blood on the street? Blood on the street gives you value, according to many market sages. What's your take?
Absolutely not yet, Larry. As you know, we continue to flash the lights yellow, and we are definitely waiting till well below the 1250. This fear of Greek contagion actually breeds not only a credit crisis, but a potential liquidity crisis in the banking sectors, not only in Europe, but it could spread into the American banking sector as well. It's not very transparent, rather, who owns CDS, where, and how much, and it's just too much uncertainty for us at this stage of the game.
All right, Tommy Belesis, would you be a buyer here? Do you have that kind of courage to step in? I mean, today wasn't the end of the world. No, it was just a nasty market.
No, I agree, Larry. I mean, if you bought into the Greek scare over a year ago, you made money on that rally. Now, obviously, you were in a vacuum of good news, so there's not much out there to balance out the negativity. But I would be buying into this because of a few main reasons. You got valuations at the greatest level since November. You got interest rates very low. The 10-year Treasury today at 3% and headed lower. These are all bullish indicators for stocks. I'd be buying this market.
What about the drop in oil? Give me some quick, pithy comments. First, drop in oil, huge drop in oil, closed around $95.
Yeah, down 5%. I think that's great because it means lower gas prices, which puts more money in consumers, which is overall good for the market. So I think overall, you'd have to pick your spots, but I think I would be buying on the dip here.
All right, Lincoln, why is the rise in the dollar and the drop in the euro necessarily bad? Might capital not flow into the USA?
Yeah, well, it's not necessarily bad certainly for European stocks and for multinational stocks, people who do actually business in the euro. When the euro is cheaper, that's actually good for that kind of export. And certainly a stronger dollar could reflect either possible shifts in monetary policy or stabilization or lack of intervention from Fed and Treasury.
A high dollar,
but I have to say,
high dollar and a low oil price give an inflation tax cut. We've had the reverse for the last 6 months, where the dollar has fallen and oil has gone up. That probably is what's caused the economic sputter. Why wouldn't this new turn of events? I'm sorry Europe can't get it together with Greece, but it's to our benefit, is it not?
It absolutely is to our benefit, but if you look at the total net of that entire passing of the winds, you're going to try and sail in a place where there is no wind. So you're just tacking back and forth. And to your other guest's point, I mean, the fact that stocks are cheaper today than they were last week, or that stocks are actually coming in terms of valuation as to where they were a year ago or last November, seems an absolutely ridiculous reason to buy anything. The global macro contagion, the global macro thematic of uncertainty and new, real environmental issues that will affect profit margins.
All right, hang on. Let's hold the profit. Let's hold the profit stuff. We're going to add to the panel. We're going to bring in some new shock troops, some new recruits to help us out. Jamie Cox is managing partner at Harris Financial Group. Jim LeCamp is portfolio manager at Macro Portfolio Advisors. Jamie, a lot of blood on the streets today. I want to ask you, minus a collapse in profits, the consensus is still $95 a share. Isn't there now more and more value in the stock market?
Absolutely, Larry. I mean, think about what's happening with consumers. I mean, my goodness, coming to a pump near you very quickly is going to be lower oil prices, lower gasoline prices, going to translate into more consumption in the American economy. Most of the stocks in the S&P 500 have already sold off. Most of the things are baked in the cake. Technology and financials, I think you can find enormous values in manufacturing companies, cyclical companies. You pick them, you can find good values. Even you can find things in bonds. You can actually get high yield that's on sale right now, too. So I really believe, absent some type of calamity, you've got an opportunity to average in this market while the technicians try to figure out what level we're going to try to end up at before we go higher.
I mean, Jim LeCamp, for investors watching after a rotten day in the stock market, let me ask you directly. Do you see a double-dip recession? Do you see a collapse in profits that would cause stocks to continue to fall? Or are there good values in the market right now?
No, it's not the end of the world here, but I don't think it's the end of the correction either. I think you have to wait to look for those good values. The markets have gotten spoiled. They've bought every 2, 3, 4% correction during QE1 and 2. This one could be a lot bigger. I think the markets could go down to 1,200 on the S&P 500, and it's going to be a readjustment of profit expectations and a readjustment of economic expectations that's going to do it.
Exactly.
Not the end of the world. I just think it's not the end of the correction yet either.
What are you looking for the end of the correction, knowing full well, Jim, knowing full well that no one can get the precise bottom of the correction, including yours truly. But I'm suspecting that after a blow-off day like today, we are awfully close to a correction bottom. In other words, Jim, what do you buy? How do you put your little toe in? My pal Jim Cramer says there's always some value to buy stocks someplace. What are you looking at here?
I don't think it was a blow-off day because the volume wasn't heavy enough. So that's one of the reasons I'm not buying yet. But when I do buy, I'm going to like the fertilizers. I like silver and gold still. I like a lot of the economic recovery plays, still materials if they get cheaper. But I just think it's too early yet, and I don't want to be in there yet.
All right, hang on. Everybody stay right where you are because we've got a lot more to parse through on this lousy day in the market. Coming up later, show, violent protests in Greece force a government shakeup. Slam stocks as investors worldwide. We continue our coverage of today's big market drop and Greece problem. Back with Jamie Cox of Harris Financial, Jim LeCamp, Macro Portfolio Advisors, Tommy Belesis, John Thomas Financial, Lincoln Ellis of Strategic Financial. Jamie, let me go to you. What are the odds, in your mind, as an expert investor, of a Lehman effect? If there were such a freezing up of liquidity and credit, where would you run and hide? What can you say to people?
Well, you've got to be in cash, Larry. I mean, if we have a Lehman-like effect, I think you have to be in a FDIC-insured type investment. I don't expect that to happen, but I think you need to be in cash. I don't think you'll have that synchronized problem like we did right after Lehman where all assets will go down at the same time. And that's the problem with systemic risk. And those type of problems, everything kind of drops. People search for liquidity and they sell whatever they can. And then you get big sell-offs in equities and bonds and whatever they can liquefy. So I think the safest place to be would be in cash at that point. But like again, I don't really think that's going to happen, largely because I think it can be contained.
Or, Tommy Belesis, Greece will go away. They will make a deal. Somehow, they will make a deal. There may be a restructuring, but the European banks will not go down. There will not be contagion with the American banks. Sure. Now, that may be very Pollyannish, but as you said earlier, that's actually more or less what happened a year ago with Greece, and they kicked the can down the road with Portugal and Ireland, too. Can you bet on that as an investor, or is it just too Pollyannish?
You know, I think the media is blowing this way out of proportion. I mean, yes, Greece has its problems.
You
but
don't mean me. You just mean the general mainstream media.
Absolutely.
I'm just asking questions.
Yeah. I think overall, if Greece contains itself and it restructures its debt, you know, with the EU, I think the market is going to rally. And I think based on earnings, which profits have been, you know, outpacing, you know, the rest of the market, you know, for the last 8 quarters, over 30%. I think people have to focus on profits, and profits right now are huge. So you buy profits.
Or Lincoln Ellis, let me ask you this. Maybe this isn't all about Greece. Maybe there's a lot of people who took a look at some of the economic stats today. We're going to have a deeper economic segment in a minute, but I'll just get your investment take. Maybe they took a look at the New York Fed Manufacturing Index and decided we're going into a double dip. Is that your point of view? I know you're very pessimistic. I know you're very bearish. I know you're running for the hills. Is that your point of view?
We're, as you know, Larry, we're not double-dish recessionistas, but we are definitely of the mind, as our friend Constance Hunter from Aladdin Capital has been writing for a couple of weeks, that the Greeks will default. There will be a credit and a liquidity disruption event, and we would like to be, as we are at the moment, going to be very much on the sidelines when that happens. It's a very sloppy event, and yes, we'll stay up here in the hills for a little while.
Does sidelines mean cash? Does that mean cash as per the Lehman effect?
Cash and bonds inside of 5 years.
Jim LeCamp, what's your take? What happened today? Let's put Greece aside. Jim, was there panic over the economic stats today, yesterday, the last few weeks? Are you betting on that, or are you going to put your little toe in and buy some cyclical, growth-oriented stocks?
Well, it's not an either-or situation. The market's worried about all of these things. Now, where we are now is a whole lot of cash, and I completely disagree with Jamie that you be in cash when it happens. When it happens, it's going to be too late to be in cash. I think you need to be in cash right now. Now, we're not all in cash. We have some silver and gold. We're long the dollar. We're long a few tech stocks, and then we're short the general market as a hedge. So we're really hedged against the market here because the risks are very, very high. I don't see a double dip, but I see cheaper prices, and I want to be able to buy those cheaper prices with cash.
Tommy Belesis, what's your favorite investment right now, Tommy? What's your favorite investment?
I would buy energy on the dips. You know, we've done extremely well buying energy stocks over the last 12 months. I think any more pullback on the energy side.
Buying on the dips is your real strategy, though, for pretty much the whole stock market. Is that fair?
Absolutely.
Because you believe this is going to have a positive outcome down the road?
I do.
You're in for the long run? Is that possible?
We are. Yes, we are.
Are you the last American investor who's in for the long run? It's a very admirable character trait, and you may be dead right, but is that your view? Just keep buying the dips and stay essentially long?
You know, you have to be selective. You got to watch the market, of course, but I think overall, if you buy on the dips with the economy where it's at and going forward, looking at the profits, you're going to make money. Investors will make money.
You're betting on America.
But what?
Absolutely.
Yeah, go ahead. Last
What happens when you buy the dips and then the dips get a lot bigger and you've spent all your money? I think you need to have some bullets in your gun.
What kind of bullets?
Well, we're at about 40, 45, 50% cash now, and then we have some non-correlated assets in there as well. So we're only about 30% exposed to the market. I'm going to be all in if we hit the November lows or if we have a capitulation type sell-off here, but until then, the risk is too high.
Jamie Cox, who's going to buy European stocks? Takes a brave soul. German economy is very good, Jamie. What do you think?
Well, I think you have to play it indirectly. I mean, multinational companies are better. I mean, I don't know who's going to buy them. If we have this contagion event, that's not going to be me. But, you know, I think if you're looking for indirect exposure, I think that's the way to go.
All right, well put. Thank you, gentlemen. Appreciate it. Jamie Cox, Jim LeCamp, Tommy Belesis, and Lincoln Ellis coming up on Kudlow. So what does the future really hold?